The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Welcome to Squawk Box. I'm Karen Cho with Steve Sedgwick and Arabile Gamedi. These are your headlines. Crude prices jump after Iran fires almost 200 ballistic missiles at Israel, dialing up tensions in the region after the death of Hezbollah leader Hassan Nasrallah. Vice presidential candidates Tim Walz and Vance face off in what is likely the final debate of the US presidential race, clashing on immigration, foreign policy and the economy.
Donald Trump delivered for the American people. Rising wages, rising take-home pay, an economy that worked for normal Americans.
Kamala Harris has said to do the things she wants to do, we'll just ask the wealthiest to pay their fair share. When you do that, our system works best.
The Nasdaq leads Wall Street lower as stocks kick off the fourth quarter in the red, whilst the JOLTs data shows a surprise rise in job openings in August. And the Hang Seng surging on its return from a one-day holiday. Chinese stimulus boosting the sentiment around the world's second largest economy, with property stocks nearly 15% higher.
Nike sinks almost 6% in extended trade. That's after the sports retailer withdraws its full-year guidance and postpones its investor day.
These markets could not be more fascinating at the moment. At the micro level, bottom up and top down across the board, we have enormous stories from geopolitics to the US political agenda to the Chinese stimulus to numbers out from the likes of Nike as well. There's so much for us to discuss.
I've got to say, we kept asking yesterday whether it was right for investors to be somewhat cautious given we'd rallied to a record high on those US markets. Still a lot of election risk. And of course, we had the big debate for the vice presidential nominees yesterday. But there's a lot of geopolitics playing out. We knew there was going to be some sort of retaliation in the Middle East, yet there was no real note of caution much in the markets. So here we go, a market that's peeled off in reaction to the geopolitics.
But I think the Iran action, as much as it is the largest barrage for a long, long time between these two parties and the Iran missiles, I think it was 180 plus, in the fact that they apparently told the Russians this was going to happen so it could get back through channels, the fact that we knew there'd be a reaction as well, the fact that no one has died in Israel on the back of this action, there's other things going on as well, says to me that this is actually more measured than some of the headline rhetoric as well. If we take a look at the oil price, I think this is very important for our world as an economics and business and politics channel as well. We can see actually Brent crude trading at 74.76, WTI trading at 71.11. And Mike, the leading producer on the show, and I today were just debating whether it was a jump, whether it was a surge, whether it was just a rally in oil price. And I think you can make a good argument for a lot of it as well. But especially when you put it in context, and I just want the context of where we were at the lows of the session, because despite the Chinese stimulus, there is real concern about oil demand globally. Now, we've seen other commodities rallying, and we're going to speak to someone who knows an awful lot about this, Jeff Curry. That's coming up at 8:30 BST as well, he formerly of Goldman's as well. But very interesting, the price action. At our low in the session, we were at $66 on WTI. We were below $70 a barrel on Brent, and that's about concern, of course, about oversupply. So very, very interesting, the move on the back of what we saw as geopolitics. But if it were to die down, what does that mean about overall demand and overall supply concerns? Now, Israel has vowed to respond after Iran targeted the country with more than 180 ballistic missiles last night. The IDF said most were intercepted with the assistance of a defensive coalition led by the United States. Dan joins us with more. Dan, it is not for me to downplay the significance and the importance and the ramifications across the board. But the fact that these missiles, these attacks, these drones were successfully intercepted, I think some were intercepted over Jordan territory as well. And the fact that there were no mortalities that I understand in Israel on the back of it, does this mean that actually, despite the rhetoric at a leadership to leadership level, this was a moderate and expected response?
I would agree with that assessment, Steve. Of course, not just intercepted, but also telegraphed. Iran told Israel that this attack was going to take place. Nevertheless, what we've seen unfold in the last 24 hours does mark a significant escalation of tensions between Iran and Israel, and it has had quite a significant impact on risk assets and in commodities. What we saw was Iran pushing about 200 ballistic missiles into Israel overnight. As you say, most were intercepted, and at the same time, what we've seen here is, lights streaking across the Israeli sky, sirens sounding the alarm, but Israel's defense systems were ultimately effective here. The overall damage appears to be limited, and critically, NBC News reports there were no immediate casualties. So the question now is, how will Israel respond? And of course, the country has vowed to respond to this Iranian attack, which of course comes after we saw Iran launching this following its recent actions against the Iranian allies, Israel's recent action against the Iranian allies in Lebanon, and the killing of Hezbollah leader Hassan Nasrallah. So listen in to the Israeli Prime Minister Benjamin Netanyahu explaining exactly what Israel could potentially do next.
Tonight, Iran again attacked Israel with hundreds of missiles. This attack failed. It was thwarted thanks to Israel's air defense system, which is the most advanced in the world. I congratulate the IDF for its impressive achievement. It was also thwarted thanks to the vigilance and responsibility shown by you, the citizens of Israel. I also thank the United States for its support in our defense efforts. Iran made a big mistake tonight, and it will pay for it. The regime in Iran does not understand our determination to defend ourselves and our determination to retaliate against our enemies.
So it has been suggested that Israel could launch a significant retaliatory attack here, but you also have to try and get a sense of the escalation risk here and what the appetite for escalation may actually be. Israel is already fighting a war on more than three fronts here, of course, against Hezbollah, Hamas, and the Houthis. At the same time, Iran can't necessarily afford a wider regional war, nor a war with Israel, and its own appetite for escalation appears to be low, particularly after we saw the Iranian leader speaking to NBC News saying he does not want war. Nevertheless, I've been speaking with analysts over the last hour on the air who have suggested that we could potentially see Israel maybe targeting Iranian oil infrastructure. Maybe we could see Israel targeting Iranian weapons caches. Maybe we could see Israel also targeting military sites as well. But of course, all of that remains to be seen. And that is the most important point right now. Exactly what Israel does next will determine what risk assets do next as well. So this is going to be really important to watch. But again here, because there was no immediate casualties being reported, the US also saying that Israel should perhaps, again, similarly to what it did in April, take the win here, then the appetite for escalation appears low at this point. But of course, we have to watch and wait to see what happens next.
Dan, thank you very much for giving us a wrap up of all the events from overnight. Vice presidential candidates Tim Walz and JD Vance faced off in the first US vice presidential debate, and likely the last televised debate of the presidential race. The two candidates clashed on immigration, geopolitics and reproductive rights, as well as who would be best placed to support the American economy.
Donald Trump delivered for the American people. Rising wages, rising take-home pay, an economy that worked for normal Americans, a secure southern border, a lot of things, frankly, that I didn't think he'd be able to deliver on.
Kamala Harris has said to do the things she wants to do, we'll just ask the wealthiest to pay their fair share. When you do that, our system works best, more people are participating in it, and folks have the things that they need.
And joining us now is Frank Lavin, who is visiting fellow at the Hoover Institution and former United States ambassador to Singapore. Great to catch up with you again, Frank. I want to bring up the debate and see how you thought it played out. I should point out to the audience, longtime Republican as well. It was a less spicy affair than what we saw with the presidential hopefuls, but that was expected. In terms of how civilized it was, how it unfolded, what did you make of the developments?
Yeah, it was sort of encouraging, I thought, in that both parties were civil, were substantive, and there were times when each of them were even gracious in offering compliments, modest compliments to the other party. So it was sort of an old school debate from the 1950s or 1960s where people simply tried to articulate their vision and tried to find common ground with the other person. There was no personal insults or denigration in this debate, Karen. So it was kind of a break with the recent norms.
Frank, what was interesting about these two vice presidential nominees is that effectively they are pitched towards middle America, which you'd think the pain point here would be the economy, maybe inflation, the legacy here. But the narrative ahead of the election keeps changing so much. And our lead story on the show around the geopolitics, potential never-ending war that's been unfolding now in the Middle East seems to not have a diplomatic ending. Some of the trade issues, of course, with China, something you've been at the forefront in the region for many years in Asia, but domestically, the economy. What do you think voters are going to vote on when they go to the election in November?
I think overwhelmingly economic issues drive voting behavior. I think the international issues only surface meaningfully if there's turmoil, if there's actually a prospect of a war or something has just transpired, a terrorist attack, something of that nature. But in general, it is domestic issues. Who is going to provide the best opportunity for economic growth, economic stability, job security, and so forth. And that's a lot of what the debate tonight was all about as well.
Yeah, Frank, it's very interesting. I'm reading Gideon Rachman in the FT this morning, the Financial Times, and says Israel and Iran have just delivered the US elections October surprise. Do you believe actually this plays into Republican strength, the fact that President Biden has seen this war develop, these crises develop as well, and I say it, Russia, Ukraine, on his watch?
Well, maybe at the margin, Trump is viewed as a more robust, more forceful. And in that sense, Trump contends that foreign parties take him more seriously than Biden. But I also think Biden's sort of sedate approach to office is also reassuring to a lot of Americans. So I don't think the fact that there's violence in the Mideast pushes the election necessarily one way or the other, because violence, unfortunately, is chronic to that part of the world. So I don't think anybody blames Biden for Iran's behavior today.
Yeah, I'm just going back to personalities. I mean, like you, I was so pleased to hear them talking civilly to each other and talking about policy. We expected that from Walz as well, but Vance comes with a mixed reputation. Is the guy reinventing himself literally every day to being actually a very listenable person and actually quite moderate compared to his previous comments?
Yeah. I had exactly the same reaction, Steve, that he had an attack dog image over the last few weeks, and he would be pretty forceful in throwing punches. But that's not always the way to win. I mean, that might help you dominate the moment, but it can actually be off-putting to a lot of undecided voters if it comes across as rude. So he was perfectly polite, and again, he even looked for episodes where he would compliment Walz. I don't know what brought all that about, but I think it was effective. And I think the polls are going to show a very slight victory for J.D. Vance over Tim Walz in this debate. Not huge. Walz was competent and capable and did a good job, but I think Vance just tended to prevail a little bit more frequently.
Yeah, but I mean, Frank, you know way better than I'll ever know. This is about a few voters in a few states as well. And I'm just wondering, a lot of people have been accused of being rhinos who have just got fed up with the way the Republican Party's gone. They would have looked at that and thought, OK, maybe there is a brand of republicanism for me, who went purple, possibly going back to republicanism.
Well, you're right. I think he was reassuring sort of establishment type voters. There's still some things he's talking about, such as tariffs, that most establishment Republicans don't like, and he has to sort of equivocate on this great question that one of the moderators asked: Did Trump win the election or not? Where of course Vance knows Trump didn't win the last election, but Vance can't say it because he's insulting his boss, and Donald Trump's a pretty thin-skinned guy. So Vance had to sort of dance through some of these questions, but in general, I think he was sort of reassuring to middle America, reassuring to establishment Republicans.
Frank, we didn't hear a lot about China, only where we saw Walz and where it was positioned around Tiananmen Square. No real sort of expose here on what they really think when it comes to China tariffs, that the hawkish China policy that we've seen through both administrations. Now, what do you make of the likely outcome, though, for the Asia-Pacific region if we have a Harris win versus a Trump win? Because to me, so far, it seems as though under the Democrats, we've had tough talk, but with some negotiation. Under Trump, it felt like it was just tough talk and a very cold response from China.
Yeah, by the way, if I may just clarify, Karen, because I did think that tariffs came up and Vance specifically mentioned offshoring jobs to China or sending manufacturing jobs to China, and that his tariff proposal is going to bring them back. So in a way, I think your point is accurate, because China only exists in this debate as a domestic political issue, as a manufacturing and jobs issue, right? But it was very different from China policy or what is China doing in Asia, what should the United States do about it. I think what you just articulated a minute ago is pretty spot on, that Kamala Harris comes from sort of that international leadership tradition in America, where we'll look at alliance relationships and other type of bilateral initiatives. And Trump is overwhelmingly less interested in those kind of architecture questions and more interested in friction. And he manages sort of with sort of tariffs and sort of negative power. So Trump is going to look at China and say it's time for tariffs. And Biden, I think, is going to look at China and say it's time to enhance the Quad. It's time to improve our military posture in Asia. And it's time to look to cultivate other relationships.
Frank, thank you so much for joining us today and staying up late for us. Great to catch up with you to hear your thoughts.
Thanks, Karen. Thanks, Steve.
Frank Lavin with us, visiting fellow at the Hoover Institution and former United States ambassador to Singapore. Arabile.
Well, Karen, coming up on the show, the U.S. JOLTs survey paints what is a mixed picture of the labor market. We'll discuss how that impacts the Fed's rate-cutting pathway. That could get very interesting. Plus, Nike shares, well, those have stumbled in after-hours trade as the sportswear giant withdraws its guidance and warns of a weak holiday season. What does that mean for JD Sports? Well, we'll find out how that plays into it when we speak to the CEO, Regis Schultz. That's coming up at 7 a.m. BST. Stay.
Investors turning their attention to the geopolitics stateside yesterday, and these attacks that we saw from Iran on Israel, the missile strikes destroying some of the confidence that we've seen on Wall Street even a day earlier when we traded at fresh records. The market peeling back, and you can see the Dow down 0.4%, modest decline, but stepped up selling elsewhere. On the S&P 500 down 0.9%, to the Nasdaq falling 1.5%. There was a lot else happening too. The port strikes, investors focusing on a supply chain snarls that could have implications for pricing and for economic impact. And on the data, don't forget it's a fairly big data week as we're counting down to non-farm payrolls. The JOLTs yesterday is suggesting that the labour market is cooling as we saw a rise in those job openings. And a dose of earnings too in the mix. Nike, as investors were again disappointed by the revenue and the traffic numbers through stores. So a lot of reasons to be somewhat cautious in session. I want to take you to Treasuries and how it played out when you take a look at these yields. You can see sliding 3.6 the level on the 2-year, the 10-year at 3.73%. But again, it's there's jobs report Friday that could be a big mover for this market. Look at the dollar. That defensive tone has been supportive for dollar trades. And this morning we've got euro dollar as a result on the back foot, sliding to 110.5 roughly. Cable also dropping about 0.1%. Dollar climbing versus the Japanese yen, getting closer to the 144 handle. A dollar sliding there versus the safe haven Swissy. That is, again, the safe haven bid that's in the market. To Asia, and what we're witnessing there, and investors, again, looking for more stimulus. The stimulus out of China has been moving the needle on these markets, and you can see very much so for the Hong Kong market that has rallied close to 7%. So it's EVs, technology, not just property. Investors are looking far and wide. And of course, that Shanghai market has been where a lot of the action has been based. The Kospi and the Japanese stock market, those sliding in line with other global markets. To US futures. This is how we are setting up for the trade ahead. It does look modestly downbeat. Very small ranges again, but you'll note the colour. That is a downbeat tone. Steve.
I love the JOLTS figures. I think you learn a lot from it as well. And I thought it was stunningly robust at a headline figure. Look at this. US job openings saw a surprise jump in August, according to the Labour Department's JOLTS survey, rising to just over 8 million after 2 consecutive months of declines. By the way, the dollar rallied yesterday for all kinds of reasons, but including that. Look, sub-data was slightly mixed, though. Let's be honest about it. New hires fell and resignations dropped to a 4-year low, indicating the labour market, well, this says the indicated labour market remains, so I think it was a score draw. The headline figure was robust. My read here says suggesting the Fed could be remain on its rate-cutting path. Well, I think we know that. Right, moving on. Major shipping ports in the US are set to stay shut until union pay demands are met, according to the International Longshore Association head Harold Daggett. Speaking at a New Jersey picket line, Daggett said either the workers win or the port will never open again. Oh dear. Economists don't expect a short strike to have a major impact on the US economy. But if the impasse continues beyond a week or two, economists have told this channel that price hikes could be on the cards as supply chain issues compound. One early casualty of the strike is Novo Nordisk. Interesting. Head to our website to see how the Ozempic maker is trying to deal with slimming supply lines. Whoever wrote that, bad pun.
Nike shares are pulling sharply lower in extended trade after the sportswear giant scrapped its guidance for the year and postponed its investor day as it waits for new CEO Elliott Hill to take the reins in just under 2 weeks. Arabile has more on the story. Arabile, it was a story around traffic, what they're seeing in terms of it through the stores, digitally as well. This is another weak outing for the company.
Yeah, so it's really a difficult story for Nike because they've also tried to perhaps focus a little bit more on in-store sales as opposed to only going out to a lot more of the external outlets. And they've tried different ways, but the problem has been innovation as well. And whether that build-up of stock has actually impacted the business quite significantly. Well, they did indeed withdraw their annual revenue forecast on Tuesday. And that was perhaps the big element and the reason why post-session then you saw a drop down in those shares. But they did, of course, decide to have their investor day postponed. And a key reason for that wasn't really anything other than bringing in that new CEO that you've just spoken about, Elliott Hill. The company saying it provides the new CEO with the flexibility to reconnect with employees and teams, evaluate the current strategies, business trends, and develop plans to best position the business then for future years. So that's going to be important to do. Obviously, you can't then have an investor day when you're still looking to do that. Revenue slump, indeed, a big part of this. Let's remember that we're talking about a company that's slumped in terms of its share price as well, 18% so far this year, and then recouped around 10% since September 19, when the company announced Elliott Hill then as successor to Mr. Donahue. Now, talking about revenue, that did slump then, as you can tell there by those figures, just over 10% or so then as well. And that's a significant drawdown for a company that has always led pretty much the race then when it comes to sportswear apparel and sportswear branding. But now, could there be an upside to all of this? Certainly could be in play, but their footwear sales are the big problem that has hampered a lot of this. Traffic declines across Nike-owned stores, website as well being more pronounced than even before. And you're seeing that footwear sales growth, which has been a significant pillar then for the company as well, see a bit of a drawdown. Could China be returning, however? You saw sales still anticipated to be low, shall we say, right? The market was not anticipating too much then out of China. It did come out better than expected in terms of sales out of China. But whether there's a consistent upturn with regards to that, I mean, that will have to wait to be seen, because the company will still have to prove a lot over the coming weeks, months, and even years. I think this new CEO has a lot indeed to put forward, guys.
Arabile, thank you very much for that. Just a question around the strategy approach here now. Nike's talking about getting some scale, some newness and innovation. And is that the answer? I mean, when I go into a store and I look at these shoes, and obviously I do different types of sports, from golf to cross training and beyond. I do a lot of walking, so I do buy a lot of shoes, and of course the athleisure category as well. To me, I haven't seen anything that looks different for years. All the shoes I buy look exactly the same as they have for the last decade. So is there a point here where some newness would make a difference? I mean, what do you see? You do a lot of running, so do you see innovation out there?
Nike, without doubt, reinvented running with the carbon plates and the just in the sport that I love and enjoy so much. No doubt about it. They led the field. Arguably, they lead the field. There are others out there like Adidas with Pro 3, Pro 4, and Puma. Everyone's coming out the rails. New Balance, they all come out the rails with fantastic shoes. The innovation that Nike showed was phenomenal. But as you quite rightly say, most people don't buy $280 running shoes. Most people buy athleisure as well. So I don't know if there has been a lot of innovation in a lot of those areas.
Is it like phones, like smartphones? They look the same. They're a little bit better. They do better things, but they don't look much different.
If it was me and it was the latest running shoe, I have to buy the latest Apple 16 equivalent. Yeah, unfortunately. A lot of us are like that. We're bonkers. spend too much money on it.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to CNBC.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabi Lekumete, weekdays on CNBC.